Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, July 22nd, and we're looking at the last 2 days of the SPY's market profile here on Window Trader. And like two armies getting their troops ready to do battle, we have the bears that are trying to defend a price probe trend day down, and we have the bulls with all their ammo from the previous day trying to defend that. It should be a very, very interesting initial balance to start the day. First and foremost, we are one time framing up 3 months, 3 weeks, 3 days. So the first thing the bears have to do to get any kind of traction is to take out yesterday's low to bring the daily back into balance. If they don't do that, nothing has changed. On the flip side, if they do that, then where we have single prints from the 20th at a very visual level is last month's high and the 8-week balance high. Not a surprise, that's where buyers took off from on the 20th. So let's go to the destinations. Destinations you should have from yesterday. So I'll give you a couple of them on the upside. It's the price probe, right? We don't know if it's accepted or rejected until today. We closed above it a little bit. Right now we're trading right around it. 324.87, that's L's low. Then we have the single prints. M's high to C's low, 325.38 to 44. 10 wide at 326.26. And then yesterday's high of 326.93, and then that huge gap that needs to get filled. And remember, this POC was not lowered yesterday, right? It's a little nuance, right? For the downside, we have yesterday's low of 323.94, the price spike of 323.81, and then that set of single prints, 323.51, and get filled at 32. Excuse me. That's the very important one because that's last month's high and the 8-week balance high. And you should have the rest of the downside destination. So what do we expect this morning? Well, we're going to find out if those sellers were really real in L&M or it was just a case of all these week longs puking out with momentum selling, with shorts trying to push it down, right? We know how M period the next day acts. Well, this one's even more important because there's a price probe smack in the middle of it, and look where we are right at it. So if we are to open, now again, there's still just about an hour to go prior to the opening. If we are to open below the price probe, I'll look to take a put play. We'll have lower value to start, and my goal will be to take out yesterday's low, and then the destinations would be the price spike, and then the single prints on the way down, and see if there's buyers there again. So I would be peeling off my put plays as we came in against those very visual levels. If we open in the next hour above the price probe, but below the price, the single prints, again, I could take a put play with the same destinations to the downside. If the single prints get filled and we get accepted above M, well, then there's a very good chance you're going back to that POC, which was very visual at 10 wide. Remember, we were 8 for 8 wide, and it also got raised later in the day before this flush out. So if the probe and the single prints are overtaken by the bulls, you're going to trade back to that POC. So I'd be out of that trade. As far as a call play, again, right here in the price probe, single prints, I don't have one right here. If we are to come down, take out yesterday's low, and hold either the price spike or the single prints, taper off, most likely I would wait for B period. I'd like to see one time framing up because we're going to have lower value. Then I would look to take a call play. Or in the next hour, if we're to open above the probe and the single prints, so we'll be in value, then maybe you could take a call play and use M's high as you're out, because we know the deal, right? If we open above M but get accepted into it, you're going to most likely trade the whole range of it. So if you were to open above it, above the singles, you could take a call play out if you're accepted in. First destination would be that POC, and then yesterday's high, which, don't forget, was a poor high for the ES. Again, this is all pre-market looks with an hour to go. You're in CamelbackTrading.org's voice channel room. You're going to get up to the second updates as the market opens and it evolves. As far as my price spikes, I'll be trading today's expiration. Now, again, these are going to change drastically, but if we are to open where we are, I would probably take a put play against the single print fill, which is at 325.44, so I'd probably play a 326 put. As far as a call play, I would play either a 324 call against today's low or 323 call against those single prints. But those will change, as that is very fluent as price moves prior to the opening. And now, let's just go to the charts. Everything's one time framing up in threes. 3 months, you want to stay above last month's high. 3 weeks, you want to stay above that 323.41 weekly high, right? This gap is a daunting gap to fill, right? There's no way it was going to get filled the first time. We'll see if it even gets filled the second time if they attempt to get into it today or sometime in the near future. And the same on the daily. One time framing up, 3 days above the fray here for now. The bears are going to have to take baby steps. That first step is to take out yesterday's low to put us back into a balance. Otherwise, the bulls, as poor as the volume has been and the tempo has been, are still in control. Good luck trading today. Have a great day, and we'll recap at 4 p.m.